Here's an example using a recent short trade in the Australian dollar futures. The short trade is entered here, and the evidence is as follows. Number one, I have value being plotted intra-session bar by bar, and there's a hole in intraday value which is likely to revert. Number two, the market is currently dominated by a systematic trading model, trading within the first and second deviations of VWAP that's anchored to the London equities market. Number three, for the European time zone, starting with Germany, the white arrow is pointing to where there is a shift in traders accepting doing business to then no longer accepting doing business. Number four, which refers to this level up here, big picture wise, the market is currently trading below a significant transition in agreement, which is acting as an anchor to the downside. And number five of our evidence, the market maker or an HFT create a melt up in price on no liquidity. See how there are single digit prints in the volumetric or footprint bar, and see how the volume is then done at the top of the bars up here. And buyers who chase price up to get filled are doing so where? Well, they enter at the first deviation of VWAP, anchored to London equities, and the transition in accepted to less accepted prices for Europe, and at the big picture transition anchoring prices to the downside. And then of course there's that hole in intraday value beneath their entry, which is likely to fill. This is a set play trade for me, which I've seen many times before, and I know the odds are buyers will be forced to exit at lower prices. The point is, I can see a bunch of traders getting long who don't know about all the evidence we just covered. That ranks those traders lower than me, so I choose to fade them. So I've referenced using at least 9 evidence points, but in the previous example, there were only 5. We all know moving from one small trade to another is not how you generate the best payouts, those 10 times, the 10 baggers. To achieve the large payouts, you use evidence points to come up with a big picture trade idea. But that big picture trade will consist of trading a number of pieces of a move, each having its own evidence points. What I'm saying is the 9 or more evidence points combine big picture evidence and short-term evidence, all coming together at once. I reckon an example would really help here. Look at that big transition area where we've just come off. So we've been down here twice, and the market, so down in this region, and the market doesn't want to do business there. So any shorts in here, and there's not actually that many. There's hardly any shorts. If anything, you got actual bigger players getting on the long side in there. And remember that where I'm really interested in doing business is between these 2 arrows. So who cares about down here? So this is worth having a poke at, isn't it? On side, just looking for continuation, and you got some recent short inventory here, and all of it is offside. So a clue for me will be, see how this order here just got pulled and this one up here got lightened? Now, if we don't reverse now, in other words, if we continue, I'll use that as a cue to add. So this is interesting, isn't it? Look at all the business being done here at 43. Lots of acceptance there. So that means some of those shorts are able to get out without too much difficulty. It's whether or not we then start to put pressure on the remaining group, because this has 2 effects. One is obviously we're reducing the number of shorts offside, but also you've got shorts who are not yet willing to exit, and they'll probably lean on this. So what I'm looking for now is acceptance above this to see that we do in fact get some continuation. It's a very strong argument here to go, well, you know what, I'll just take some money because I need the next step in the narrative to take place. All right, so now you know that we've got some shorts here leaning on this that are now going to consider covering. So that's good enough for me to try and work an order on the long side, utilizing cushion from a lower entry. Now 45, that's where that big group of sellers starts. And they have been able to basically lock the market from moving higher. So we got through here. That was the first step. Now, how do we go with these next big group of sellers? Again, orders pulled above and the market's like it's dismissing that, right? So getting a number of failures around here. As I said, this is where that big group of sellers commences. So that's what the holdup is. It's a big group of sellers. So they're trying to push this wall of selling. What it hasn't done is the market's not repelled though at that area, is it? It's having a good go at it. I want to be, for this little area, predominantly flat because we've got potentially further to go. I can leave some on that might assist with building a cushion if we were to get higher. We're also in the area for the sweet spot to be against the shorts. See this view down here? So up to that area to the tick. Right, so I've taken out money, got a little bit left if we then shoot back up above this area where it was anticipating a reaction. Have started to add to what was left of my other position with the benefit of understanding what areas are outdated, because who cares about this area down here? Value's on the rise. So you've got traders who are looking for a move back into this area, but they've completely overlooked. It's different this time. Value's on the way up. Back then, there was a macro shift to the downside. There's not now. It's been to the upside. And so you can start to see where traders actually put together their points of evidence that leads to them getting trapped. So we've still got shorts, not really under pressure, as I said, so no need to cover. So a push up to this area of value is what now I'm looking for. Coincides with where expansion is. So I'm trying to line up a few things, but basically that's the exit strategy. And so the reason why this pays so much more is it's not just the number of ticks that it's moved, but when you've got something that you can see as playing out to the extent that this has, it gives you the ability to add, take some, go big. And that's how you generate superior risk to reward outcomes. Because if you think about what you initially risk versus what you end up banking for it, and you compare that to, let's say you were just in a vacuum and just went, I'll just take a long to here, and that's it. And then maybe you take a short from here to there. You're missing the opportunity to actually get size on and let the market fund that size, so you're not having this, it will reward X, but my risk for it is also nearly X as well. Whereas what we're doing is we're creating a superior risk to reward outcome by being able to participate in a bigger narrative. And what we know from just the way that the market behaves is you're not going to get every trade that turns into a big paying narrative. It just doesn't happen. But you have to be at least trying to look for it to be able to grab one. We have to play the game in a way that allows us to have a financial outcome that's skewed in our favor.